The financial markets shuddered a bit after the president announced he tested positive last night. The Dow Jones Industrial Average fell more than 400 points at one time, but recovered. It moved into positive territory briefly during the trading day before slipping again. WAAY 31's Megan Reyna spoke to an economics professor at UAH who said the president's diagnosis should not cause a major economic crash.
And markets don't like uncertainty, right? This is something, we hope they make a full recovery, but sadly, there's the possibility, that anything could happen.
Wafa Hakim is an associate professor of economics at the University of Alabama in Huntsville. She says the initial shock over the news of the president and first lady contracting coronavirus caused a plunge in the stock markets. Even though the major indexes dropped today, they did recover through the day.
And so as more information has come out, I think people have kind of settled down.
Hakim says the bigger impact of this news may not have to do with your bottom line. She said the president's positive test is a reminder that the virus has not gone away. But when it comes to Wall Street, she believes investors have already made adjustments to keep the market going.
I wouldn't be surprised if we see a continuation of the same pattern, because at this point we've had enough experience with COVID to know how it affects different industries, right?
The industry that is thriving right now, technology.
I think if you looked at the indices on average, if tech stocks continue to do well, you wouldn't necessarily see a huge crash. I mean, you might see dips. You'd more likely just see movements coming from the increased volatility.
WAAY 31's Megan Reyna reporting. Today, the government reports the U.S. economy added 661,000 jobs in September. It's the final jobs report before the election.